Hey guys, welcome back to the Always in Profits Instagram page, and today I'll be doing the trade review of the trade of today, and today is on 9th September 2023. So this is how I got the trade of today. First, we can start from the daily time frame, as you can see. This is how I got the trade of today. So there was this demand level here, right here, and market continued going deeper into the demand level. So our bias of today was, as you can see, we're expecting that EU will continue going higher. You see, so we're in a phase where we're expecting EU to go higher. So there's two scenarios. It can either go deeper into the demand level and tap the last zone of demand, which is down here, a fractal level, or it can come and clear out this low to continue respecting the weekly order flow. So that was one bias I had in my head, and the problem with this, you're trading phase D, because you're against the 4-hour trend, you're against the daily trend, you're against the 15-minute trend. So you're trying to catch a reversal, and that's why it's called phase D. And it's the worst phase to trade because you might be stopped out. Because what market does, it builds liquidity before it moves to the direction that you want. And what is building liquidity? Taking out stop losses for people who are buying early. So it will come give you a fake signal, take you out. Give you a fake signal, take you out. Because it's building liquidity to go high. So that's what the analysis I had on the daily. As we go down to the 4-hour time frame, I'm speaking fast because I don't know how long IG has limited these videos, but we can see here this is where market closed yesterday. There was this low, and it happened on Wednesday, as you can see down below. It happened on Wednesday at around New York session, and that's the time I stopped trading because I don't trade New York, I trade London session. So I closed it here and I saw, okay, it's creating a low that might be taken out. So when you go back to the 15-minute chart, we can see that this is the low that was created. And what did that low do? It broke this one. It broke this low. And we look for the highest point where I marked it as a strong swing. I marked it as a strong swing because market is downtrending. And what does strong swing do? They are always protected. Market will never take out a strong swing unless it wants to reverse. So it created another weak swing here, which I marked before it was taken out. And it was taken out today, the same time as yesterday. How this other one was taken out at around 4, even this one at around 4, it was taken out. So we can see here this 15-minute week swing and it had been taken out. So we had this whole range for today to trade. So I was looking first for buys because remember the daily objective. We are looking to continue the buys. But what market does, this demand is still big. It can go deeper and start reversing from down here. So that was my first bias to look for the buy signal because I was targeting this Asia highs liquidity on top here to be taken out because that's what happens almost every other day. You see, some days it doesn't happen. So today was that day that it did not happen. So if we come to the 1 minute time frame, we can see that market has been. Let me clear this chart so it becomes neater for us. And as we go to the 1 minute chart, we can see what happened. Market came and tapped this demand level, and what it had been doing, because I started trading around 10, as you can see, I didn't know it was building liquidity. It was building liquidity unless till the time I was taken out here as I was looking for a buy signal. I was taken out around here, and that's when I noticed that this market is building liquidity. Because if we come to the line chart, we can see there's this sell side liquidity and buy side liquidity. You see? So the market first took out the buy side liquidity and then came and took out the sell side liquidity. So that's what I saw, and I noticed it around 1 o'clock today. So after that, I came and looked for for supply level that might continue the trend down to the downside. We can mark, we can see it is here. So I stopped looking for buys and I looked for sells because we can still continue going deeper into the demand level. So what happened? It cleared out the sells, the buy side liquidity first, and entry model of ours started playing out, which is the first step of the supply level, clearing out the first step, which we call liquidation, and then we come to the 3 minute time frame to look for a better PBL, point before liquidation, which is the last zone that takes out the first step of the supply level. So we can see it is a failed zone and it was playing out good because you see how it tapped. And let me show you 1 minute. Let me mark this thing so you can see it better. You can see how this zone reacted. Why is it refusing? There. So we can see how when a demand or supply level is tapped many times, it loses its strength, especially this way. Heri itap ingie deeper iendelee kutafuta more zones on the lower time frame than doing this. This is building liquidity. So I lost my bias of buys and started looking for sells because I saw this zone will be taken out. So first we saw it tapped, and then the next thing we do is look for the inducement. What is an inducement? Is trying to induce people in a direction before the original move has happened. And zones that can do that is either this zone, there's no liquidity type here. It's only I'm seeing only an inducement. And yeah, so I saw this as the first inducement. And I went to the 5 minute candle and I saw that there's this whole demand, this whole supply level, sorry, this whole supply level. And my bias was, yes, I knew there was this whole supply level, but because of looking for high RR, I marked this as where I'll enter. Because as you can see the difference, I had around 2 pips stop loss. And if I marked it from down here, which I will have not missed the trade, I would have around 3 pip stop loss. So a difference of 1 pip. So I marked my entry here around 1.062, there, and I had 2 pips stop loss to go to the downside. So that was my initial move. So the trade was missed by around 0.6 pips to the entry, and that's one thing I want to change. And I will be taking from the distal level. I won't be taking from the midpoint level or the 0.25% level of the zone. I'll just be taking this because I've been missing trades lately because of that. So you see, if I did that and I would have hold this trade for around 40 minutes and hit TP. So that's what happened. If I placed here, I would have done a 5 hour trade, so 3 pips stop loss and a 5 hour trade. Let me move it appropriately. Let me reduce 5.15, 15 pips. Yeah. So that's what happened, and it hit TP a few minutes. Actually, it's 1 minute after news unemployment claims for today. That was the high impact news for today, and I was confident in this because of the direction of the market. There was no demand, appropriate demand level to buy from, so news was most likely to sell, and we can see how it created an entry from here, an entry criteria from here. So it will be like a 2 pip entry to the downside, but we don't trade news. So yeah, that's what was the buzz for today. And if this is how I took the trade, it will be 2 hours and 34 minutes to hold. So thank you guys for watching. And if you have any questions, please drop it down to the comment section below. Thank you. I wanted to add upon a trade I've seen right now during New York, and it's this one. And we can see what has happened. will be marked TP here. I've seen it during New York. I don't trade New York, but you can see market came, liquidated. Remember, we're still in a demand level. So market came and liquidated the low, came and cleared out PBL impulsively, and then came back correctively, inducing people entering, took off. So this is a trade I wanted to add upon. So yeah.